Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking gold futures. Well, that $1,200 support, we're going to call it a support range. 1,200 is obviously an exact price, but that's kind of the level that I'm going to use to describe the range that we have stayed above since we last saw 1190 back in January. It was January 30th, actually, that we were trading around 1190. We've hit down as low as 1194, but never really quite cleared that 1200 level. And yesterday's low of 1204 seems to be again affirming that 1200 is support. Gold fell early today and then rebounded later in the day without making a new weekly low, which is a short-term bullish sign. It's not anything crazy, especially when you see the overall trend has been down since the recent highs above 1300. The copper rally that we saw today, copper rallied actually close to a percentage point with gold up less than 1/4%. But a lot of the copper rally was due to a strike that we're seeing in Peru. Has to get approved by the government, but it looks like it will be, taking a bunch of copper off of the market for the demand to chase. The demand obviously is going to be chasing less copper, and this is important because commodities trade in sympathy with each other. Commodities tend to trade in a basket, especially metals to metals, even though that's a base versus a precious metal, copper being base, gold being precious. They do trade in sympathy, so that helped a later in the day gold rally, along with a very short-term double bottom pattern that formed around that 1206 area. That all helped gold pop just a little bit intraday after it fell early. We also had a stronger dollar. The dollar continues to strengthen as the market awaits Janet Yellen's testimony that begins tomorrow in front of Congress and then Thursday in front of the Senate Finance Committee. And the dollar has done nothing but strengthen. Nothing crazy in terms of percentage moves. It seems to be more covering, but we're waiting to see if during the Q&A of this testimony with Janet Yellen, she continues on the path of removing accommodation, most specifically with the balance sheet, the shrinking of the $4.7 trillion Fed balance sheet, more so than the rate hikes. Pretty much the world has decided that there's going to be one more rate hike and not more. So unless data changes drastically. So when you have global central banks removing accommodation, that's bearish for gold. But with the other short-term bullish factors, we finished slightly up on the day in gold futures. This is Bob Iaccino talking gold futures, as I just mentioned, from the CME Group trading floor in Chicago.